Stocks are ripping higher. Tech is kind of mixed today. You have Nvidia taking a little bit of a breather, but Apple's up. Microsoft's down from the open. Tesla's slightly up. So Nike, keep Nike, Foot Locker on the radar. Right now we do have a bunch of Fed speakers coming out. So definitely be mindful of all the Fed speakers. And we'll just have to see how it comes out to fruition. So I'm looking at Nike for a long. Nike long. FL long. Nat gas long or short. And we'll just have to see how the rest of the market opens. So out of the S&P 500 right now, you have 154 stocks up, 53 stocks down. So it is good breadth. Right now I am seeing the DXY starting to outperform again, trying to get a little bit of a rally off of the lows. So you can see that it had a nice pullback and now it is starting to bounce up a little bit. What I'm also observing is that the 2-year yield, so yields are continuing to scream higher here. So the 2-year yield is making a new high, sitting at 4.3, so that should put some pressure on the markets. It's recapturing all the daily moving averages. I'm just going to scroll over to the Russell now to see what small caps are moving, and then the NASDAQ. So GSI is up nicely. Let's see what's lagging this market. A couple interesting names that are down. Let's go to the NASDAQ now. And again, I might be looking at the S&P short here as well. So keep your eye on the S&P. The spiders are gapping up. I have them hitting this resistance. This 420 level is a big level on the S&P. I'm actually interested in shorting it off the open. So pay attention to that. The pre-market high right now is around 420.90. 420.90. So if we get a pierce to this level, it is a potential short trade. GSI is up 13%. Good volume. Let's see this GSI. GSIT, I should say. So this GSI is gapping up. You are inside of this little bit of a reversal. We'll just have to see. Let's take a look at Cisco. CSCO. So Cisco's pushing up as well. Qs are up nicely on the session. So energy stocks are going to be the outperforming sector today. I am seeing lots of strength in energy. Right now the energy sector is up about, let me just take a look here. Look at the S&P energy. So you have 20 stocks up in the energy, 2 down. Technology is the actual lagger today. So AMD is down about 1.2. Nvidia's down just slightly. Microsoft's down. The only stocks that are green in the technology are CDNS, Apple, IBM, a couple other names. I am interested in PayPal for a continuation long on PayPal. A continuation long on Disney perhaps. Materials are doing well. Consumer cyclicals are mixed today. So obviously those are the likes of Nike, Foot Locker, Lowe's, the retailers under pressure. But then you have Goodyear Tire, Harley Davidson, Lennar, McDonald's pumping pretty nicely. Real estate strong today. Oxy's getting a nice bid. Valero, XOM is slightly up. Looking at steel stocks, they're doing not too bad today. They're up as well. Bitcoin's trying to make a little bit of a move up on the softer dollar. Gold is still putting in some bearish consolidation on the daily and intraday charts. Blackstone is catching a small bid. And what I'm going to do is I'm only going to be on this stream for about till 9:25, 9:26, so a few more minutes. And then I am going to switch over to my YouTube channel. So I am going to encourage anybody to flip over to YouTube and join us there. You know, some gold mining stocks are showing some weakness. Keep in mind we have Powell speaking today, so that might be a potential opportunity, which creates market volatility. I'm seeing the regional banks acting slightly well today. Nvidia's falling a little bit more. Let's take a look at AMD here. AMD's under a little bit of pressure today. 107. How about Micron? Blackstone's getting a nice bid. Coinbase is up on the session. Let's take a look at healthcare stocks. So AMD is looking like a downtrending name. If we get a little bit of a bounce initially off of the open, we can look to play a trend to the downside. I am liking that it's weak, so if we get a bounce to the upside on it, then we look for a short play on AMD. Spiders are still at the highs of the session. We're about 7 minutes till the market open. So technology, if you're looking to short, technology is the weaker sector today, and it is showing, it is definitely extended out of most names. Even looking at Cisco maybe for a short, it's just hanging on to some positive gains. AMD's obviously weak. Nvidia's down slightly, but that's been a powerhouse stock. Apple's still up 0.63%. I'm going to check out healthcare. Healthcare is really strong today. You have DVA, Amgen's up nicely, Eli Lilly, Gilead. A couple ones that are weak today, but more or less holding up. Out of the S&P 100, you have Halliburton, Cat, Oxy, ConocoPhillips, SPG, Capital One, BK. Let's take a look at Capital One. COF is the ticker. So Capital One, I'm interested in shorting. Where I'd love to see it retrace to is basically we're coming up into this 100 moving average. So I'm talking and the 200 moving average, kind of this almost this necktie of moving averages. So keep that on your radar because we are looking at a short on Capital One if it pierces this 200 moving average sitting at about 100.90. So 101 would be a decent level. Let's look at Palantir. So Palantir was up huge yesterday, up 14.54%, getting a nice little follow through. Let's see if we have a level to isolate on Palantir. I'm going to go to the weekly chart. So Palantir is pretty strong here. One trend line I am seeing is this one. So maybe if we got to push up to about 13 bucks, but it is pretty extended at this moment in time. I want to flip to the intraday to see what type of consolidation we got. So it is about 925. And I'm going to flip over to my other stream. So feel free to join me at Trading Capital Inc. on YouTube. We do live streams on YouTube. And it is a free. Going live on YouTube. So again, Nike, Foot Locker, Palantir, Capital One, Micron, AMD, those are some of the names I'm watching today. Nat Gas, of course. And then we'll just have to see what other trade setups we get. But I do expect some volatility, especially since Powell speaks at 11 and there's a whole host of Fed speakers today. On that note, thank you all for tuning in. Definitely join us for free on our YouTube channel. On that note, thank you all, and we'll see you on YouTube. We're going live in about 4 minutes. Hey everybody, welcome back to Trading Capital's daily live stream of the market open. Today is currently May 19th and it's a Friday. And right now we have a little bit of a mixed market. The spiders are up. The Qs are seeing a little bit of relative weakness due to the fact that tech is showing a little bit of weakness. It is the lagging sector today. Keep in mind we have Powell speaking today. I'm also watching this dollar trying to make a move. Yields are up substantially on the session. And I do think that the S&P is likely going to be a short along with the QQQs for a day trade. So keep the Qs on watch for a short trade on the Qs. And we'll just see how this market opens. If we get a little bit of a pop-up, we can play the Qs on the short side. I'm looking at AMD on a short side as well if we get a little bit more of a downtrend. I'm looking at Nike on the long side. Nike is gapping down on that Foot Locker earnings, so trading below here. In terms of Nike, you can see I'm looking at the daily 200 here, and that's probably about the Foot Lockers getting demolished right now. That's interesting. Capital One, I'm also looking at a short into this daily 100 and 200, so keep Capital One on your radar for a short trade, basically at this daily 200 moving average. Just going to flip back to the intradays. Spiders are also a short opportunity. Capital One and AMD. So the spiders just took a little bit of a dip there, led by technology. I am going to mark this on my chart here for a long trade on Nike, so keep that level on watch. And we're just going to see how these spiders open right now. So Nike's certainly under pressure. Let's keep an eye on the spiders. Right now it's still technology's weak. Consumer cyclicals are mixed. Strong sectors are industrials, staples, utilities. All utility stocks are up. Nat gas is up. Energy stocks are strong, but oil's taking a bit of a breather right now. All right, markets are set to open here in a few minutes, basically 1 minute. Just going to flip my charts back to the regular session so I can see the gap ups. All right, markets are set to open here, guys. Markets are open. Apple just had a big dump. Spiders are a short at this level. Spiders are a short. Let's see if AMD gets a little bit of a bid, and then we can look to that on the short side. Let's take a look at Nike. Keep Nike on your radar. Let's look at Capital One. Capital One at a Pierce of 101. I do like Capital One on the short side. Spiders are still hanging in there. AMD's catching a bid. First Solar's weak today. Apple's pushing up. Nvidia's trying to push up. Microsoft's also pushing up. Tesla's strong. Markets are acting well as of now. Oil's taking a big dip. So right now we have 298 stocks up in the S&P, 91 stocks down. Nvidia's weak. I am still liking Capital One or AMD. Let's look at Palantir here. Palantir's breaking out. I am interested in Palantir on the short side. If we get a Pierce of 12 bucks. Spiders are starting to trickle down. Keep in mind we have Powell. Nike's coming up into that daily 200. Let's see AMD again. AMD is struggling at this pivot zone. AMD is struggling. Palantir is getting a nice boost. BABA's down a few percentage points. Regionals are acting well. You have the KRE acting well. Gold is softening up. Nat gas is still hanging in there. Energy stocks are still performing well. Most stocks are still green. PayPal just had a big reversal. Spiders are trying to push up again. Markets are getting a nice little boost here. Spiders are trying to push up. More stocks are turning green. You still have 91 stocks down. Energy stocks are still struggling a little bit. Or sorry, oil's struggling a little bit. Energy stocks are still hanging in there. Walmart's getting hit pretty hard. So Walmart might be a downtrending name on the short side. Take a look at Walmart here. Walmart's getting pummeled on the back of that Nike as well. Nike's catching a small bounce. Never quite hit my level. Nat gas is still acting well. PayPal's getting rocked. AMD, let's take a look at Micron. Micron's also looking like a short. QQQ's still strong. You have 100 stocks down, 310 up. Spiders are still at the highs of the session. Apple's holding up well. Palantir's moving up. Alright guys, I'm going to grab a little bit of Micron short here at 67.43. 67.43. It's a 1/6 position. $67.43, we're short Micron. And basically my stop loss is a close back above this key trend line. If we get a 3-minute close back above this trend line, I will stop out. I'm looking for a target on Micron down to the low end of this range here, so about 66.80. Spiders are at the highs of the session. I'm seeing AMD weak, so semis are actually weak today. Technology is struggling. You have AMAT, AMD, Lam Research, Nvidia, CRM all leading the downside charge in the S&P 500. Nike's down 3.9. Let's take a quick peek at the S&P here. That's pushing up. Google's ripping. Google is ripping higher. Coinbase is acting well. Meta's surging higher. Netflix is softening up a little bit. Again, we have Powell at 11. Keep your wits about you. Wow, big move on Palantir. I have a short at Palantir around a Pierce of 13 bucks. Micron, we're still short Micron here. Still interested in Nike if it hits that daily 200 at 112.47. AMD is starting to trickle down a little bit more. Let's take a quick peek at the S&P 100. That's still holding up. How about the Russell? The Russell showing great strength today. Majority of stocks in the Russell are up. Nvidia is still acting weak right now. I'm seeing yields trying to surge higher. In the NASDAQ 100, you have 35 stocks down, 53 up. It's really the consumer cyclicals that are lagging. Amazon seeing some weakness. Starbucks is also seeing some weakness. More stocks are trying to turn red on the S&P 500. So we're still short Micron here, slightly in the money. But markets are still acting well here. Powell comes on at 11. Guys, PayPal for a long looks a little intriguing. PayPal for a long. Actually, if we fill this gap, which we're very close to, it looks interesting for a long trade. Nvidia is still weak. Let's look at Micron again. Micron's just hovering off that level. AMD's catching a small bid. Spiders are trying to push up near the highs. 311 stocks are green in the SPY. Nike's coming up into that daily 200, so keep your eye on that specific stock. AMD's getting a good push. Healthcare's acting well right now. Alright, AMD is also another short here, guys. AMD touches that 106.92. It is a potential, although we are shorting the semis via Micron. But AMD is looking like a short here. Alright, I'm going to grab some... I'm just going to hold off, actually. I am going to hold off for now. Micron's starting to fall a little bit more now. So that's good to see. I'm going to protect Micron with a break even at 67.43. Break even stop loss at 67.43. Spiders are still acting extremely well. Gold is weakening. Let's take a look at these miners. They're starting to come down a little bit more as well. PayPal's still weak, coming down into its gap fill. Alright, I'm going to lock in 10 cents, 67.33 stop loss. Spiders are at the high of the session. Spiders are at the high of the session. So are the Qs. Nat gas is starting to fall. Alright, markets are still coming down. Micron's still acting well, guys. We're in the money nicely. Alright, I'm moving my stop to 67.23. 67.23 on Micron. So we're locking in 20 cents. Spiders are at the highs here. Walmart's still under a lot of pressure today. Oil's starting to come down a little bit more. Markets are still trying to push up here. I'm looking at a spider short and also a GDX short here. So GDX looks poised. I'm seeing the dollar trying to break to the upside. Alright guys, I'm moving the stop to now 67.11. Sorry, 67.13. Locking in 30 cents. And we're about to be stopped out there. We're still good though. AMD's pushing up to a key resistance level. Alright, I'm going to short AMD here too at 106.97. 106.97 AMD. Micron, we're still valid in Micron. We've locked in gains on that trade, but it's very close to stopping us out here. Alright, I just got stopped out for a 30-cent gain on Micron. Stop out 67.13. It's a nice little profit there. Let's manage AMD now. And we'll flip back to the spiders. The spiders are seeing its first little red candle. Nvidia had a decent bounce. Tesla had a decent bounce. I'm looking at PayPal maybe for a long. I'm still interested in Nike for a long. Gold is still trying to roll over. I'm seeing the dollar trying to push up. More stocks in the S&P are churning red, but the markets are still holding up here. We're seeing Palantir still soaring and roaring. So mega cap techs are starting to push up. You have the QQQ acting well. Healthcare stocks are still strong. Eli Lilly's making a push. Nvidia's getting a big push to the upside now. Spiders are acting well. QQQ new high. We have Powell in an hour and 10, but spiders and Qs are still pushing up. Yields, dollars pushing up. Let's look at Palantir again. Palantir is starting to soften up, but acting very, very well. AMD is starting to come back down. Let's take a look at the spiders. The spiders are into a decent short level here. I would be careful going long this particular name at this point in time. China stocks are weak. Walmart's still under pressure. Meta's still acting well. Netflix is getting a little clobbered right now. Still have strength in Nvidia coming up now. Apple's pulling off the highs. Microsoft, Tesla's still strong. Spiders are still at the highs of the session here, guys. Regionals are acting well. Google's up 1%. Amazon turned negative. FTCH is up substantially. FTCH. Let's see if there's a short on this name. Volume's pretty good. I would short FTCH if we got a push up to that 578, maybe even a pierce of $6. $6 seems pretty decent, so we'll keep that on the radar. AMD is still hovering, acting okay. Spiders are seeing a little bit more selling starting to occur. Apple's softening up a little bit here. I'm seeing weakness starting to come into Paramount. Dollar's still acting well. Oil's under some pressure. AMD is starting to come in a little bit more now. Let's take a look at Oxy. I'm seeing oil weakness, natural gas starting to soften up, so some of these energy stocks I may be interested in shorting. I do like XOM here potentially for a short. Just watching it closely, seeing if the spiders have any more weakness. Let's take a look at its counterparty CVX pushing up. Alright, I'm going to short CVX here. Let me just see if it filled that gap. See if we can get a pierce of this 155.90 level. 155.90. It is starting to come down a little bit more. More stocks are turning red. Foot Locker's still down 24%. Nike's down 4.14%. Gold is softening. Apple's starting to fall, so that should weigh in on the market. Microsoft's negative. All right, I'm shorting CVX here at 155.98. 155.98. CVX is starting to push up. Spiders are seeing a little bit of sell side pressure. So I'm just going to inform you all that this is going to be the last live stream that I do for about, I'll do a little bit when I can, but I'm in the process of moving my studio, moving my house. So I'm actually looking at just outfitting a new studio, and I'm going to be in the process of moving. So my live streams won't be as consistent as they usually are. Once the setup is done, I should be back and rolling around July 1, hopefully sooner. But I am in the process of relocating to a brand new studio, looking to set up and move. So it's a big move in the process. I'm still going to be trading. I'm still going to be issuing my swing trade alerts to my members and following the markets religiously. But I will be busy moving and relocating, so the live streams will take a little bit of a pause just for a moment here. AMD is starting to come down, so I'm going to put a break-even stop now on AMD at 106.94. We're 44 cents in the money. Actually, I'm going to move this to 106.66. I want to lock in some gains here. 106.66. And as it falls, we'll keep moving that stop down. So 106.66. I am seeing some energy weakness as well. More stocks are turning red in the S&P. All right, I'm going to move my stop now to 106.44, so locking in 50-cent gain here. Locking in 50-cent gain on AMD. CVX is still okay and acting well. All right, move a stop to 106.34 now on AMD. We're locking in 60 cents here on the short side. I am seeing the dollar push up, so the GDX might be a nice, interesting trade here. Let's take a look at the GDX. GDX should come down here, but since we have two short positions, I'm just going to manage them. AMD is starting to fall. All right, I'm going to move my stop now to 106.14, locking in 80-cent gain. 80 cent. All right, we're about to get stopped out here. We are about to get stopped out. More stocks are turning red in the S&P. All right, we just got stopped out at 106.14 on AMD for an 80-cent gain. Nice job there. Nice job. That's 2 for 2 in the morning. Nike, I'm still interested in going long Nike. PayPal might be an interesting long. Let's take a look at PayPal here. PayPal still hasn't filled that gap. I would love to see it retest this red bar. This was your breakdown and your consolidations. I'd love to see it come back down here for a long trade. Let's look at this CVX. Seeing the spiders trying to push back up to the upside. Meta's starting to come in, so it's weighing in on the communication side. Still a lot of strong stocks right now. Communications are still acting well. Disney's weak. Netflix, Dish, Charter. Google's really strong right now. Palantir has reversed from the highs. Nvidia is starting to come in a little bit more now. We're still seeing strength in Chevron, but oil's weak right now, and it's probably going to come in because the dollar. Take a look at this dollar popping. I almost want to short the SPY here. So the spiders are looking like a short trade at this point in time because of the dollar ripping higher. Keep in mind we're overbought, and Powell comes in to play later in the session along with a whole host of other Fed speakers. Let's look at the CVX here. Steel stocks are under a little bit of pressure. You have Paramount getting clobbered a little bit, so communication is starting. Even home builders are starting to soften up a bit. Home builders have been the leaders of this market. So in the S&P right now, you have 292 stocks up, 138 down. The regionals are even starting to fall sharply lower here. Chevron, spiders are still coming down. Q's did put in a 10-minute reversal candle. So a retrace on the Qs is a short. So this is if we get a retrace up to 337 here, the QQQ is a short. But again, we'll just play it patiently. I'm seeing nat gas soften up a little bit. So you still have Foot Locker down pretty substantially. Nike's down also substantially. Looking at Nike, looking at Foot Locker for a long. Eli Lilly's breaking out to new highs. That's super intriguing. Eli Lilly is breaking out to new highs. So you're seeing some money rotate a little bit defensively today. Still the weak names are consumer cyclicals. Home Depot's even under pressure. AMD's still weak. Let's look at Chevron. Chevron's still trying to hang in there. But if that dollar continues to push up, spiders are still strong right now. Let's look at FL, Foot Locker. Foot Locker still hasn't hit my levels to personally go long. So you're still getting a push up in Chevron here and the S&P. I'm going to add to my Chevron short if we get a pierce of this level. PayPal's pushing up. Seeing oil still weak right now. Qs are still coming in. XOM's at the high of the session. Alright, I just added to my Chevron at 156.40. 156.40. So it's a 2-6 position. Brings the average up to 156.15. Apple's still holding up. Nike's still under a lot of pressure right now. It is starting to look like it wants to resume its downtrend. Nvidia's down 1.5%. Foot Locker's still down 25. Amazon turned red. Tesla's hanging in there right now. 126 stocks up. Let's take a look at the NASDAQ now. So if we pull up the NASDAQ, we'll look at the Russell first. The Russell's where the strength is today. Majority of stocks in the Russell are still green. And then in the NASDAQ, QQQ, if I pull up the NASDAQ 100, you have 39 stocks down, 49 stocks up. So the Qs are still lagging this market, and they are probably a relative weakness short play. Probably back down to this 336. I'm still interested in maybe playing on the short side. I'm seeing weakness in a variety of names here. Netflix is still down. Gilead's acting well. Regeneron, Vertex Pharmaceuticals, Adobe, AVGO is holding up, ISRG. So a lot of the healthcare names, some communication names are holding up because of Google. I'm still seeing the Qs break down some more here. Chevron is acting well. Take a look at these Qs. They're still rolling a little bit more to the downside. Nike's also on watch. Still interested in Nike for a long, but it's now hovering. It's been consolidating over that level, so I don't like that daily 200 that much more. And Nike is a weak name that we could short because the markets are making new highs, but this is still falling. Still falling. Let's take a look at Chevron. That's still holding up well. Microsoft's still weakening, so the Qs are still coming down here. Nike is catching a little bit of a bid. Let's take a look at Nvidia here. Nvidia is coming up into some support here. It is looking weak though. because you're breaking these pivots. So basically a retrace back to these pivot zones could be a short opportunity, and then you just use a stop loss, basically a 1 or 2 minute close above there. We'll just manage Chevron for now, which we're in the money coming in. Chevron's starting to fall a little bit more. Still seeing majority of the NASDAQ up, majority of the S&P up. Strong stock is Deere, DE. Oh dear. The S&P is starting to soften up now. If the Qs get to that 337.50, it is a short trade. Alright guys, protect the Chevron trade now. Protect the Chevron trade with a break even at 156.15. 156.15. I'm seeing oil come down a little bit harder now. Oil is starting to come in, and this is one of the reasons I started shorting energy, is because oil had a big move up, which is what lifted energy stocks, and look at this big decline. Boom. So even though it was one of the stronger sectors, the underlying asset and commodity that moves the energy market is oil. Alright, we may get stopped out though, break even. AMD's falling a little bit more now. Gold's trying to catch a small bounce. Bitcoin's rolling over a little bit here. Let's see, Foot Locker's still trying to catch a little bit of a bounce. Home builders are starting to roll over. You did have some insider selling on the home builder front in KB Homes and DR Horton. Nike's pushing up. PayPal's trying to push up. Meta's seeing a little bit of selling. Oil's still weak right now. Nat gas is holding up. Markets are still relatively strong. The spiders are still seeing some pressure to the upside. Nat gas is trying to move up. Energy's still weak right now. Or sorry, oil's still weak, I should say. Alright, I just got stopped out of Chevron, break even. 156.13. Sorry, 156.15. Break even. But the spiders and Qs are looking like a short here. Spiders are starting to roll over a bit. So the spiders may see some distribution here. We have Powell in 1 hour. Yields are still up substantially. I'm going to short the spiders here and just use a stop loss above this 427. So I'm shorting the spiders here at 420.46. Short the spiders 420.46. Stop loss is this 420.73, close above that. Okay. J Powell comes out in 1 hour, T minus 1 hour. So still some of the best performing stocks are Tesla. Tesla's actually putting in some bullish consolidation, so we could potentially play it on the long side. Tesla looks interesting on the long side. If we get more meaningful consolidation off this flag pattern, we could watch for a break on Tesla here. So we'll keep Tesla on the radar. Obviously, we're short the spiders here at 420.46, which I'll just put in my line. Apple's trying to put in a little bit of a move higher here. Nvidia's starting to soften up. PayPal's seeing some more weakness. Nike's coming down. Nike's another potential short. Spiders are starting to roll over a little bit more now. A little bit heavier to the downside. Foot Locker's still coming down. Tesla's holding up though. Even as the markets are kind of softening up just a little bit, Tesla is still holding up. Microsoft's coming down, so that's going to weigh in on this indice pretty hard. Google's only up 0.5% now. What is this SDA? Let's take a look at that. SDA. SDA's up 72%. I don't even know what company that is. FTCH is hanging in there. Let's pull up FTCH. That one's coming in pretty sharply. That's a big reversal on FTCH. CTLT is another one that's gapping up. CTLT is a short, and we have a nice little 5-minute reversal candle. So I'm going to grab some short on CTLT here at 36.75. 36.75. $36.75. Stop loss is going to be basically a close back above this pivot, this reversal candle. So if we get a 3-minute close above that little topping tail, I will stop out. So right now we're short the spiders, which is coming in a little bit. CTLT, keep that on the radar. And this is a 3-minute close. I'm actually going to move this to the 3-minute time frame. Nvidia, Apple seeing a little bit more weakness. Oil's still coming down a little bit heavier here. So I'm seeing more weakness in the market starting to creep in. And as of now, we have in the S&P 500, 125 stocks down, 300 stocks up. Still the consumer cyclicals are weak right now. Likes of Amazon, Home Depot, Starbucks, Lowe's, Foot Locker, VFC, KSS. All right, so in 2 minutes, if we get, actually that was a positive close. Let me just take a look at the 5-minute chart again. So if this gets a 5-minute close above this level, I'm stopping out for a small little loss. But spiders are starting to roll heavy here, guys. All right, guys, I'm going to protect spiders now. So we're short at 420.46, and we're going to put a stop loss at 420.19, a stop at 420.19. CTLT is still holding up. More stocks are turning red here. I'm getting a little bit more stocks red on my screen. Spiders are continuing to come down a little bit. CTLT. Let's keep the spiders up. CTLT. AMD's weak. Nvidia's weak. Surprisingly, PayPal's holding up, putting in a little bit of a curling formation. Looks like it may want to move higher. More stocks are turning red right now. You still have the strong sector is utilities. All stocks are green in the utility front. Wow, very interesting. So if the markets get a bounce, we may want to look at the utility names like NRG, AMERN. China stocks are still weak. Spiders are seeing more downside. Meta's starting to roll over. Bitcoin's starting to roll over. The dollar's starting to pop. Oil's under pressure. XOM is still holding up though. Very interesting. Still now 134 stocks are red in the S&P. 295 are green. So still okay. CTLT's coming down. So we're still protecting the spider trade. We'll see. All right, guys. Dollar's pushing up. Netflix is softening. Coin is rolling over pretty hard here. Coin was positive and now it's negative. Seeing PayPal roll over. Spiders are still trying to bounce here and come up. We have a hard stop at 420.26. Dollar's pushing for a new high right now. So Bitcoin's rolling over. Let's look at some of these coin shorts here. Check that rollover on coin. Let's take a look at Mara. Mara hasn't really responded, but you are seeing some weakness in MARA. If Bitcoin continues to roll, we do have a potential level. But if Bitcoin gets a bounce, that's when we could go long PayPal. Alright guys, I'm stopping out of this trade here in basically 3 minutes if we get a push up. Hard stop on this is basically going to be 37.60. 37.60 hard stop. Spiders just stopped us out here for a 20-cent gain. They stopped us at 420.26. So that's another little winner. 20-cent gain. And the spiders, nothing really to get crazy about. And I will stop out of this trade here if it pierces at 37.61. Spiders are coming back down. Let's take a look at PayPal. PayPal's a little weak. I'm interested in maybe shorting Nike again because it is a weak name. Lots of selling occurring under the hood there. So Nike is a short here. I'm going to short Nike with a stop loss. Actually, let's just wait a little bit. Let's just wait. Dollar's starting to surge higher here. Look at this Dixie go. Just going to hold off on Nike for a second. Just want to see if this market really starts to dump out. AMD's still weak. Nike is catching a bounce. So good thing we waited on Nike there. We're still short the CTLT. All right, I'm going to grab some Nike here. 114.30. 114.30. Nike short. I only have 80 shares. 80 shares. 114.30. My stop loss on Nike is going to be a close above this pivot. So we're basically risking about 55 cents right now. And I think we can still get a test of that 200. And I will actually do one add to Nike at this level. CTLT is starting to come in a little bit. Spiders are still holding up. Take a look at this Dixie surging here. Dixie's breaking out, guys. Dixie is breaking out to the upside. So look at that Dixie surge. Wow. CTLT is still acting well. Nike's still holding up. So I'm seeing that dollar breakout. Nike's pushing up here, guys. Nike is pushing up. A little bit of a dump coming in on the spiders here. AMD's still weak. Tech is still weak. $128 stocks down, 302 stocks up in the session. AMD's still weak. PayPal's still coming down. Spiders are starting to roll over a little bit more now, guys. So we're flat on Nike. And we're basically flat on the CTLT. Spiders are rolling over, though. Bitcoin's getting demolished. today. Coin is starting to roll heavy. See that Mara, M-A-R-A. Ooh, Mara's losing that pivot. This is another short trade here, guys. If we get a retrace, not too many, it's hard to go long on gap ups. It's very difficult to go long on gap ups. That's when market makers want you to go long because then you're chasing. The only sector that's worth going long is going to be like the XLE right now because it is holding up and putting in consolidation. And Tesla's the one stock that is also holding up, trying to break out. So keep Tesla on your watch because it is seeing some relative strength right now for the long side. But other than that, I mean, the market looks like it might be vulnerable. And ahead of Powell, it's really dangerous ahead of Powell, in my opinion. Seeing a little bit more strength coming in. Russell's about to go negative, so that's interesting. KRE is starting to roll over. Bitcoin's still exceptionally weak. That's why PayPal's getting hit hard. KRE is starting to fall pretty precipitously here. KRE is falling pretty precipitously. Foot Locker's still on watch for a long, but now the volatility is getting sucked out. Nike and CTLT are starting to push up a little bit here. Spiders are still actually holding up fairly well here. And if we get a bounce in tech, it could lift this market. So Nike's trying to push up some more. CTLT, take a look at the spiders. They're still actually hovering here. Coming up into our other short level. But I'm going to wait because you've been consolidating. So you could always push higher. The Dixie's still strong. Yields are still strong. Take a look at gold. Gold is under pressure today, but still actually positive on the session. Very interesting. Gold might actually be a short if the dollar starts to turn positive. Let's take a look at GDX again. That's slightly weak today. GDX looks like a short. It's struggling here. You're inside of this bearish reversal. You had a big green impulse candle, which has kind of failed because you got a bearish 5-minute close there. So GDX is a short here, but I'm just going to manage my two. It is a Friday. I don't want to get too positioned here in this market on the short side. And again, I'm going to stop out of CTLT at this hard stop level because I am seeing a bounce come into the market now. I am seeing a bounce come into this market. More stocks in the S&P are turning green here. Still have Oxy that's outperforming PXD. Oh yeah, let's take a look at Capital One, COF. Capital One never hit my 100 level. I wanted Capital One up here at around 101. Still could hit, but we'll just hold off for now. Let's flip back to the spiders here. Spiders are still hanging in there. Nike's also hanging in there. Trying to push up. Still quite a fair bit of stocks green on the session. It's approaching that 10-15 time frame. This is the last little add level on Nike. Around this 114.85 I will add to Nike, and then if we get a close above there I will stop out. So a 5-minute close above there I'll stop out on Nike for a small little loss. I'm still seeing weakness in Foot Locker, which is kind of interesting. Alright guys, Nike is pushing up here. Tech is starting to get a small bounce. Crypto's still under pressure, but the Qs are trying to hold up and push up. Spiders are trying to push up. Nvidia, AMD are still weak. PayPal's getting a push up. All right, just added to Nike here at 114.85, 114.85. That's a 2-6 position. I have 160 shares. That brings the average up to 114.54. 114.54, and again, it's now a hard stop at this level. If we get a 5-minute close above that level, it is a hard stop on that trade. Okay, spiders are still acting well. If we take a look at the spiders, they're still acting well. CTLT, I'm just monitoring on our other screen. We're slightly out of the money. It's trying to come in a little bit, but still holding up. Nike's pushing up a little bit more. AMD's starting to look a little weak. PayPal should have taken that on the long side. Look at that nice little push up. But the reason why PayPal is getting that bounce is because Bitcoin actually caught a little bit of a bounce. So it's kind of intriguing, in my opinion. Powell is here in about 45 minutes. 45 minutes, we'll get to hear from Powell. You have to wonder if he's going to be happy with the markets pushing up as high as they have. That's kind of what I'm wondering. Nike's pushing up, so we may have to stop out at Nike. We're still okay though. It's a 5-minute close basis, but we'll know our fate in 2 minutes. Dollar's softening a little bit, which is probably going to help this market a bit. Still 127 stocks are green. Still healthcare strong. Utilities, all utility stocks are green. Energy's acting well. The only red energy stocks are Philips, PSX, and HP. Valero's acting well. Oxy's one of the outperformers. Spiders still haven't made a new high yet. We are into that same short level where there's pretty decent resistance, but Nike looks like it may stop us out in a minute and 30. A minute and 30. Steel stocks are under a little bit of pressure. Home Depot's had a bounce. Disney's still weak right now. Disney's intriguing for a long, to be honest, but there's a little bit of controversy there with Disney closing down one of their billion-dollar projects, the Star Wars Hotel, not getting that much attraction, or I guess demand. Alright, so we're about to stop out of Nike in about a minute, 57 seconds here, unless we get a pullback. Nat Gas is trying to creep up here. Walmart is putting in bearish consolidation to go lower. Walmart's not looking healthy right now. So this is like a nice little bear flag for me. It looks like it wants to head lower. Alright, Nike's going to stop us out here, guys, in 17 seconds. Unless we get some big dip down. It will stop us out for a loss. Spiders are pushing up. Here comes Nike. I'm just seeing a little bit of resistance in the SPY here. So I'm just letting Nike ride a little bit lower, see if we can get a smaller loss here, but this kind of has negated. I'm going to stop out of Nike here at 115.02. 115.02 for a small loss. Basically on the trade, that is a loss of 48 cents on the trade. 48-cent loss. I stopped out on Nike at 115.02. Let's look at the spiders. They're trying to push up. Keep an eye on Walmart. Let's take a look at Affirm here. AFRM's down. MSFT looks like a potential short as well. AMD's still lagging the market. Trying to push up. Spiders are pushing up higher here. Wow. Big move on the spiders. Alright, it's approaching that 10:30 time frame. We have closed 1, 2, 3, 4 winners, 1 loser, and we're still writing our CTLT, which is just still kind of watching like paint dry here. Really hasn't done much. Powell's coming out in 30 minutes. Alright, so we will stay on and stream Powell. I might just go silent on the mic while he presents and speaks. Tesla's looking like a long trade here, guys. Tesla is looking like a long trade. You did get a bullish 5-minute close. You made a new high. Alright guys, I'm going to go long Tesla here at 180.25, 180.25. Long Tesla, 180.25. And basically my stop is going to be this 179.37. But Tesla's looking like it wants to break out a little bit higher here. It's dangerous with Powell, I will say that. It's dangerous with Powell. But we're long Tesla 180.25. CTLT is starting to cooperate a little bit more and come down. And just keep a hard stop in case anything drastic is said in this Powell meeting. I'm actually going to move this stop up to about this 179.59. Tesla's starting to push up here, guys. Nice little move on Tesla coming in. Financial services are acting well. Some of the regionals are still under pressure though. EXP, consumer cyclicals, Nike still obviously weak but trying to push up. Alright, Tesla's getting a nice little break here, guys. We're in the money about 25 cents. I'm going to put a break-even stop loss on Tesla now at 180.25. So we're protecting those profits. Protect those profits. Protect them, protect them. Tesla's still pushing up here, guys. Here we go on Tesla. CTLT is still coming down. Meta's a little weak. Netflix is a little weak today. Netflix may be a short trade idea as well. So guys, Netflix is a short here. So CTLT is cooperating now. It's coming down a little bit. I just want to pull up this Netflix chart. It's looking like it wants to come down. You're stuck inside. I'm going to short Netflix here at 367.15. 367.15. Tesla's still pushing up, guys. Move your stop loss up to I'm moving my stop loss up to 180.45. I'm going to lock in 20-cent gain. My hard stop on Netflix is basically this 369.13 area. But Tesla's moving up here, guys. Stop loss at 180.50. I'm locking in 25-cent gain on Tesla. 180.15. Netflix we're short, Tesla we're long, CTLT we're short. Alright, I just got stopped out of Tesla at 180.50 for a 25-cent gain. That was a small little winner. Tesla still has the relative strength, so that one's still interesting. So we're short Netflix and we're short CTLT. I would go long Tesla again if we got to retrace back to this pivot high, this 179.82. CTLT had a bounce and now it's starting to come in a little bit more. Paying attention to Netflix as well. Spiders are softening up, still strength in the market. 134 stocks are up, 293 are down. Bitcoin seeing some more sell side pressure, which may apply pressure to PayPal. So keep PayPal on your radar for a potential short. That is seeing some weakness. So again, keep Tesla on watch because there's another long opportunity. Hopefully it can go back down to 180. If it hits 180, that's a buy for a day trade. Netflix is coming down. Spiders are still resilient today. Qs are still softening up. Nat gas is trying to push up a little bit. Walmart's still weak. It had an attempt at breaking out. Still seeing weakness in Nike, but Nike's actually trying to make a move higher here. GE is ripping higher. CVS is acting well. Eli Lilly. So healthcare stocks are still acting well here. Netflix is trying to push up. Spiders still haven't taken out the high, but the dollar's softening now, which may help it. Oil's starting to perk back up. So take a look at some of the energy stocks. They may be a long trade. XLE is actually putting in nice bullish consolidation. XLE is a long trade here at 80.12. I'm going to go long at 80.12. Stop loss on XLE is this close below 79.99. I've just put a hard stop there just in case something happens with Powell. I know he's only out at 11, which is in 30 minutes. But just in case, you never know. But I'm seeing oil trying to perk up along with a softening dollar. So we're short Netflix, short CTLT, long XLE. Tesla's pushing up. Nvidia's seeing more downside. AMD looks like another short again. PayPal's still moving up. Regional banks are catching a nice bid right now. So Tesla's one of the bit stronger mega caps right now, alongside Google. CTLT is still just hovering, and if we look at Netflix, that's starting to cooperate and come down. So we're short Netflix, we're short CTLT, and we're long XLE with a hard stop on a 3-minute close below 79.99. Spiders are trying to push up here, guys, which is the dollar is softening. Stocks that are green in the S&P are 135, 295 down. Let's take a look at the NQ. The Nasdaq 100 has almost the majority of the stocks down. So it's about 41 stocks down, 46 stocks up. So you're starting to see more weakness in tech. That's going to weigh in on this market. I'm seeing Qualcomm weak, ALGN, Series, Starbucks, KLC, Amazon. Tesla's the outperformer in the Nasdaq 100 today, along with Intel, Regeneron, Cisco, Adobe, Gilead. Very intriguing. But definitely Starbucks, Amazon are the short names today. So your consumer communication services and your consumer defensive and your consumer cyclicals are the weak names. And healthcare is the strong names in the NQ. Netflix trying to push up. XLE is pushing up. Spiders are testing the highs. And Qs are lagging. Very interesting price action. If we get a nice bull flag break on this XLE, I mean, we do have a fair bit of upside that could commence here. I mean, you are into a gap up resistance zone, but you could move and make a move up to about 80.83, especially if the dollar gets going. I mean, if the oil market gets going here. This is nice consolidation. Hopefully we can get a breakout on this energy. I'm going to move a break-even stop loss now on energy. XLE at 80.12. I have a break-even now. Break-even stop loss because I'm seeing the dollar creep up now and the spider's potentially breaking down. CTLT is also potentially about to stop us out. It's putting in some potential bullish consolidation. Wow, Tesla had a huge breakout. Too bad we didn't hold that one a little bit longer. That would have been perfect. So the strength is definitely in the Russell today. Walmart's still weak. Alright, I just got stopped out of XLE at 80.12. Stop at break even. 80.12. We're still short Netflix and CTLT. This one's still hovering. Netflix we're flat or in the money slightly. AMD's softening up, looking like it wants to make a new low or at least test the lows. Nvidia's also weak today. Looks like it's flirting with this bear flag pattern. I could see Nvidia actually falling back down to 309 today based off of this little bearish consolidation. But the spiders are holding up. Still just hovering. Netflix is coming down. Spider's new high. Nat Gas is putting in some consolidation to potentially move higher here. So it's that 10:30 time frame. Powell comes on in about 27 minutes. Markets are fairly quiet today. Not much buying, not much selling. Markets are still up, so it's a net buy day. But there's weakness in tech. There is weakness in tech today. All right, Netflix, big dump there on Netflix. So I'm going to move a stop loss now on Netflix to 366.80. Sorry, it's falling more now. So 366.50. I'm locking in, what is that, 65-cent gain on Netflix. Oh, we just got wicked out there. 65-cent gain on Netflix. We just stopped out. It's still a relatively weak name, but that's a nice little profit there. That's a good little profit on Netflix. Nice little 65-cent gain trade. So the only position we have is the CTLT, and the spiders are still holding up. Trying to push up higher here. Spiders are moving higher. Qs are moving higher. Strength in Microsoft and Apple. Hey, yeah, AR is up 8% yesterday. It was a good move, and one of the reasons why AR was up so substantially is because of that big move in nat gas. I mean, if you take a look at natural gas, it is also holding up today. On the positive side, up 1.4, but it had a magnificent move yesterday. Look at that power impulse move. Nat gas actually broke out on the chart, and we prepped our members for this, but that was a power move. That was like a 9-10% move on nat gas. So certainly interesting. All right, spiders. I'm gonna short these spiders here. Actually, you know what? They just had a decent drop. I'm gonna pause on that trade. I'm seeing oil break down, so now energy is gonna be under pressure. Energy becomes a short if oil starts to break down more. I'm seeing oil really, really under pressure here. Look at this, making new lows. So pick an energy name. I'm gonna pick the XLE as a whole, and I'm gonna short here at 80.06. 80.06 on energy, XLE. So we were long earlier, we got stopped out, break even. Now we're short 80.06 because I'm seeing the oil market under a little bit of pressure, which means maybe the dollar is going to keep screaming a little bit higher. And the stop loss on this trade now is basically a close. Whoops, let me just erase that. A close back above this 80.25 area. But look at this nice little sell coming in. Markets are under a little bit of pressure. Big dump on the spiders coming in. Look at that. So XLE is definitely following the overall spider market, but it's also following the oil market. So oil had a pretty decent dump. It is catching a bounce. So now energy is probably going to catch a bounce. I'm going to put another break-even stop loss on energy, XLE at 80.06, but this should see more downside. It should see more downside. And 130 stocks are red, 300 stocks are up. So the majority of the market is still green in the S&P 500. Ooh, Tesla's coming in, guys. Look at Tesla. We can actually go long Tesla again if we get a retrace to this 179.80 level. Even 180 is pretty decent. You know, 180 is fairly decent. It's just you may see some money taking profits ahead of Powell because Powell's kind of the outlier event. But keep an eye on Tesla. If it falls enough, we can play that on the long side. Seeing more stocks turn red now. About a minute ago, there were 130 stocks down. Now 150 stocks are down. Still 278 stocks are up in the S&P. So there is broad market strength still remaining in this market. Hard stop on the XLE, break even there. 3 cents away from being stopped out. Spiders are pushing out. I just got stopped out of XLE on break even. Break even stop out on XLE. The CTLT is still putting in consolidation. Again, keep a hard stop, guys. Keep a hard stop on XLE, on the CTLT. All right. AFRM looks like a nice little short opportunity. Still hanging in there. AMD's trying to push up. Now the Russell's starting to weaken down. So the Russell just turned negative on us. The IWM. Apple's pushing up, which is lifting the market. Let's take a look at Nike again. Nike's still acting well. AFRM maybe a short, hoping for one more little pop-up. Nvidia's still looking weak right now. Nat Gas maybe trying to push up a little bit. Walmart. Might grab a little short here on Walmart. I'm going to grab a little short here on Walmart at 150.50. 150.50. So short Walmart at 150.50. Oil's catching a small bounce. Qs are starting to roll over a little bit heavy now. You have 151 stocks down. Let's take a look at the Russell 1000. The Russell 1000 has 308 stocks up, 450 down. And then the Russell 2000, you now have 527 stocks down, 679 up. So a lot of the stocks are starting to roll over in the Russell. I am seeing energy also seeing some weakness in the near term. So we're short Walmart, we're short CTLT. Netflix is breaking down some more. Paramount, Nvidia's weak. So Qs are starting to get very, very weak here. Let's see the Russell 1000. Nvidia's down 1.85. It's already trading half of the average volume it usually trades. If Apple wasn't near the highs of the session, this market would be under a lot more pressure than it already is. Tesla's still holding up, and Google's still holding up. Palantir's negative after having a pretty big move to the upside. Amazon's negative. Powell, T-minus Powell in 15 minutes. 15 minutes. Bitcoin's putting in bearish consolidation to potentially move a little bit lower. Home builders are under pressure. That's always a red flag for the market. When home builders, the strongest stocks in the market, have been leading and they start seeing weakness, that's a red flag. Let's take a look at Starbucks here as well. Starbucks. Ooh, this looks weak. Starbucks looks like a short. Starbucks looks like a short. Some of the stronger stocks still are like COP acting well, but potentially seeing some weakness. IBM is actually holding up well, looking like it wants to push higher. Let's look at Cisco. Cisco is putting in a bull flag pattern. But if the spiders start rolling over, obviously everything's going to get hit. Look at this dump on Netflix. I wish I had my Netflix short still. That's looking like it wants to break and head probably down to 360 maybe. Let's check back on our Walmart. Walmart's still hovering there. Walmart's stop loss is a close above 150.58. So 150 stocks are down in the S&P. Oil's breaking down. Still the majority of the stocks are up. But there is some weakness in this market that we have to be mindful of. Still some strength. But it's really the strength is coming from Apple and healthcare. And healthcare right now has a pretty decent weighting in the overall market. Nat Gas is putting in bullish consolidation. I'm going to stop out of Walmart here if we get a close in 20 seconds here. So it will be about, so far it'll be an 18-cent loss. Very, very small. Very small. Dollar's starting to creep up here, which is applying pressure to the XLE and oil. So XLE is starting to roll over a little bit more. And remember, XLE is one of the best performing sectors today. Seeing the dollar trying to creep up again. So the DXY. Alright guys, I just stopped out of Walmart there at 150.67 for a 17-cent loss. $17. $17 loss. Alright, let's keep an eye on the spiders. Let's just chill out for now a second. We still have this short trade on CTLT, which it has a hard stop on. But let's just chill out here and see what is going to transpire. Dollar's starting to creep up a little bit. So take a look at the GDX. That's starting to break down. GDX is looking like a short here. I'm going to grab some GD. No, actually, I'll just hang out a little bit. We have 15 minutes here. Shoot the breeze, but GDX is looking like a short. The spiders is looking like a short because why? The dollar's moving up, trying to break out of this flag pattern. You have oil under pressure now as well, which is trying to cause some pressure to the markets. I'm just gonna step aside for a minute and grab some water, some fluids before the Powell meeting. We're gonna put on another screen here for your viewing, and I'll be back momentarily. All right, everybody, we're back here. Spiders just got a nice little pop there. Let's take a look at Starbucks here. I'm looking at Starbucks for a short. I'm just wanting to see if it wants to pop up a little bit more. Netflix is still trickling. Dollar's still trying to push higher. Yields are still higher. The CTLT is really not cooperating. Still have a hard stop at that 37.60 level. Looking at Starbucks maybe for a short. 157 stocks are down in the S&P and 273 are up. So you still have the best performers are MAC, DXC, Ooh, Tesla, I stepped away. Tesla hit that 180 level. And basically I missed it. That's okay though. Spiders are catching a bounce here, guys. Let's look at CF here. That's putting in a little bit of a bear flag. It looks like it wants to head lower. Seeing some of the energy stocks still now under pressure because look what happened to oil. So Powell's in 9 minutes. I will go silent on the mic when he speaks. This is about to stop us out here for a loss. Still riding it. Alright guys, so if the spiders drop on Powell meeting, the long level will play for a day tradable bounce. Let me just isolate down some levels for us here. That gap fill, we don't want that gap fill. That's not a decent level. We'll mark out some short and some long levels in case we pop, in case we drop. The level I have though is sitting at around Alright, CTLT stopped us out, guys, for a loss. Hard stop out on a loss there. 37.60. That's about a 95-cent loss times 350 shares. Still way more winners today than losers. But very, very active trading. We're going to keep on Starbucks here. I'm looking at Starbucks for a short. It is a weak name. But in case the spiders drop on Powell, I'm just working out a technical level here. Just bear with me. Yields are at the high of the session. So the only long level I like on the spiders if we had a hard drop is 414.30. 414.30. I mean, you have some supports here, which is okay. You may be able to get a bounce, but 414.30 is the bigger technical level. I'll just mark that in on the chart here. If you're aggressive, you can play the second one. But we'll see. Now, if we were to pop, let's look on the daily chart. You have a gap fill on the chart here where I would consider shorting. That's sitting at about 422.07. All right, so we have some short levels, we have some long levels. Aggressive traders can take this 415.80. I'm going to be conservative on a Friday, wait for that. And then a short level appears to this 422 on the spiders. Still the majority of stocks are up on the session. Nat Gas is trying to push up some more. Apple's still holding up pretty resilient. Ooh, Tesla had a dump. I missed Tesla again. I wasn't watching. Jeepers. That stock moves quickly. Look at Tesla. It pierced that 180 level, got a nice little bounce. Since Tesla has relative strength, if the markets drop, let me just work out on a level on Tesla. Just give me 1 second. We have 5 minutes till Powell. Spiders are still holding up. All right, around 171, I like Tesla. If we got a hard drop on this market, 171 on Tesla. Let me just put that in here. I do like Tesla because it has been relatively strong. And again, because it's a Friday, you want to just lighten up your share size. Spiders are coming down a little bit more now. Starbucks is looking weak. If we shot up on Starbucks to this 106.50, I would consider shorting it. But keep Tesla on your radar for a long in case we drop. And we obviously have the spiders on our radar for both the long and the short side. Nvidia, new low of day on Nvidia. So that's starting to come in. Nat gas is starting to perk up. Very intriguing. 290 stocks are still up. 140 stocks are down. Netflix is pushing up. All right, Powell's coming on here, guys. Comes the volatility.
Top.
Nvidia's still at the lows.
Water.
Spiders are peeling away here. Bounce coming in the market. Still the majority of stocks in the S&P are up. 286 to 145. Nat gas is popping, oil's popping, so it looks like people are moving into some commodities for safety at this point in time.
I guess we can get started. Thank you all for being here. Of course, it is a true honor today to have Chair Jay Powell and former Chair and Nobel laureate Ben Bernanke with us today. Thank you very much for being here. I've very much been looking forward to this conversation. I'm sure our audience has too, so let's just get to it. This conference, as everyone knows, is dedicated to the memory of Thomas Laubach. And earlier this morning, we heard some personal reflections on working with Thomas from Secretary Janet Yellen, also former chair of the Fed, and from President John Williams. And both of you worked closely with Thomas as well. So I'd like to give you both an opportunity to share your own thoughts about Thomas's contributions as an economist, as a central banker, as a colleague. Ben, maybe we can start with you.
Sure, and it's great to be here. I was Thomas's thesis advisor, and he worked with me on a book on inflation targeting when he was still a graduate student. And that was a long time ago, and he was not yet in his exalted position at the Fed when I was doing Jay's job. So I don't have any short little anecdotes to give, but I do want to say that I think there are sort of two kinds of accomplishments a person can have. They can have curriculum vitae accomplishments, and they can have what I call eulogy accomplishments. Curriculum vitae accomplishments are things like published papers and promotions and awards and recognition. Eulogy accomplishments are the things your family remembers. You know, your kindness, your support, helping other people, and so on. Thomas was one of the few people who scored high on both dimensions. On the CV side, beginning with his work with me, he had a tremendous input into the Federal Reserve's framework, working on inflation targeting, working on the more recent Fed framework. He did work, I'm sure John Williams talked about his work with Tomas on the natural rate. He worked on the effects of deficits on interest rates, again, another contribution. So a person who made a lot of intellectual contributions at important points. But as a person, he was just a very warm, kind, friendly, helpful person, and he was just a joy to work with. And I'm glad to be here to say this about him.
Thank you. Jay?
Thank you, Trevor. So first of all, let me say this conference is a very fitting tribute to Tomas, and I'm really delighted and honored to be part of it. And let me add my thanks to those of us who made all of this happen here today. So I first met Tomas when I joined the board as a governor in May 2012, almost exactly 11 years ago. And in preparing to join the board, and then in my early years at the board, I was very focused on developing a deeper background in macroeconomics and monetary policy. Many people here at the board supported me in that process, too many to name here, but I will say Tomas really stood out. And it was during the process of reading the literature and discussing it that I really started to get to know him. He had this great ability to communicate complicated ideas. He obviously loved talking about economics, and his great enthusiasm and willingness to engage with me, a new governor, was immediately evident. He was very gracious to me, and we had a lot of informative discussions. So rather than being his teacher, I was really his student in those early years. As you know, by the time, as you noted, Trevor, by the time I became chair in 2018, Tomas was the head of the Division of Monetary Affairs. And in that role, he was a trusted advisor to me and to the FOMC. His leadership was particularly important as the FOMC conducted our first ever public monetary policy review. He played a major role in organizing that, identifying key topics, and organizing the staff all through the Federal Reserve System. He also played an absolutely essential role during the critical period of the pandemic at the very beginning, when we were marshaling our forces and our tools to stabilize the financial system and protect the economy from even more dire consequences. And through it all, he did come through as, not just for his dedication, his great intellect, and his mastery of monetary economics, but also just for his kindness as a human being, and just as in being a terrific, great colleague and a great person.
Thank you. I think there's a lot of agreement for the sentiments that both of you have expressed. Appreciate that. Before we get to some questions on some current issues, I did want to ask you both about any formative experiences that you may have had that have shaped your views, particularly about your thinking about monetary policy. Paul Volcker, in his oral history interview, tells the story of his mother, who was adamant that he received the same dollar value monthly allowance when he was in college that his older sisters did 10 years prior. And of course, he was not too happy about that, because inflation in the interim had obviously eroded the real purchasing power of that allowance. So as the story goes, that was the beginning of his personal commitment to price stability. So Jay, do you have any such stories to tell?
Maybe not quite that on point, but so I graduated from college in 1975 during what we now call the Great Inflation, and same college year as Ben. And I started working as a lawyer in the financial sector in the late 1970s. I recall from that time a growing sense that high inflation was essentially a permanent part of the landscape, just something that we all had to accept and deal with, and that the costs of getting rid of it were too high. So you just were getting used to it. Of course, ultimately, the Fed did step up and restore price stability. And one lesson from that era is that price stability is really the foundation of a strong economy, and that the economy doesn't work for anyone without price stability. Another is that high inflation when we have high inflation, it is the responsibility and the obligation of the central bank to restore and sustain price stability. So today, while inflation isn't as high as it was when I was in college, it's nonetheless far above our 2% objective, and many people are currently experiencing high inflation for the first time in their lives. It's not a headline to say that they really don't like it. So we are very aware that high inflation imposes significant hardship as it reduces purchasing power, especially for those who are at the margins of the economy and living paycheck to paycheck and need to use all of their incoming income to pay for food, housing, and transportation and other essentials. And that's why the committee is so strongly committed to returning to our 2% goal. We think that failure to get inflation down would not only prolong the pain, but also increase, ultimately, the social costs of getting back to price stability, causing even greater harm to families and businesses. And we aim to avoid that by remaining steadfast in pursuit of our goals.
Thank you. Dan.
Well, I had mentors, Dale Jorgensen at Harvard and Stanley Fischer at MIT in particular, but I'm going to tell you about something that happened to me when I was 6 years old. I used to visit my grandparents in Charlotte, North Carolina during the summer, and I would sit on the front porch of their house and listen to my grandmother tell stories about her life. And she told about how she raised her family in Connecticut in the 1930s during the Great Depression. And it was a town that was specializing in shoe manufacture, and during the Depression, a lot of the factories were shut down. And she told me that, it was a very hard time. A lot of the kids went to school in tattered shoes or maybe no shoes at all. And I said, Grandma, why would they do that? And she said, well, because their fathers lost their jobs. Why did they lose their jobs? Because the shoe factory shut down. Now, I was only 6 years old, but I could see the problem with that argument. I said, well, why didn't they just open the shoe factories and make shoes for the children? And she said, it doesn't work that way. But I think it really was a puzzle to me that you had the same productive capacity in 1933 that you had in 1928. And in 1928, people were dancing to Charleston. In 1933, they were in bread lines. And that really impressed on me, that economics can make really big difference in people's lives. And monetary policy is like that. I mean, it's, as Jay, of course, and all of you well know, that the decisions made in this building have a very broad and real effect on people's lives. And for that reason, besides its intellectual fascination, it's worth studying and understanding.
Yeah. Thank you. I know that's certainly a key motivation for many people in this room to be working so hard. Okay, let's now turn to some topics of more current interest. And I'd like to start with the nexus between the financial system and the macroeconomy. Both of you, during your tenures as chair, have faced very significant historic financial crises. Ben, obviously you confronted the global financial crisis, and Jay, the global pandemic. Those episodes were clearly acute, very vivid examples of the connections between the macroeconomy and the financial system, as well as, I think, a good illustration of the role of central banks in such episodes. But Ben, your research, importantly, and the research that you have inspired, has really demonstrated that understanding the connections between the financial sector, credit markets, and banks and the real economy is critical for even understanding traditional business cycles. So with that as background, we have just experienced a period of stress in certain parts of the banking system here in the United States. So I want to get your take on those developments, how you think they match up compared to some previous episodes, and what they might mean for the economy.
Well, in some dimension, the recent crisis has followed the standard sequence. I don't know anything about Silicon Valley Bank other than what I read in the paper, so please don't misinterpret this. But it was a classic situation where they had assets that were subject to risk, and in particular, as interest rates rose, the value of their long-term assets fell and their capital fell. They had hoped to hedge that by their deposit franchise, where as interest rates rose and interest rates moved more slowly on deposits, that would partially compensate, but they were dealing with customers who were very social media savvy, and that didn't really work. So after the decline in capital, you had the second stage, which is runs, people taking out their money, which ultimately led to the collapse of the bank, despite, I may add, the good efforts of the Fed and the FDIC to provide liquidity and provide support for depositors. The third stage of a banking crisis is contagion, and people looked at other banks and said, oh, they look sort of vaguely like Silicon Valley Bank. They got the same number of letters in their name and all kinds of things like that, and that caused people to begin to remove, deposits elsewhere. And finally, the reason this is important, is that it ultimately affects credit conditions. And the Federal Reserve is, of course, looking at the effects of bank problems and other financial issues on the extension of credit and therefore on the real economy. So, in that respect, I think it's very similar to other crises. I think it's different from the global financial crisis in many ways, including its scale and scope, of course. But I would mention a couple of things, a couple of important differences. One is that the impaired asset in this case was U.S. Treasuries, which are very different assets in kind from subprime mortgages, in that U.S. Treasuries can always be valued accurately, and so there's not the uncertainty that was associated with subprime mortgages. And secondly, as the economy declines, if it does decline, U.S. Treasuries actually become more valuable rather than less valuable, and so there's kind of a counter-cyclical effect. So that's one very important difference, I think. And then the other worth mentioning, but very important, is that relative to, say, the GFC or the Great Depression, overall, borrowers are in much better shape, than they were in these previous episodes. And that makes a big difference, both in terms of the stability of the banks and also in terms of the impact on consumer spending and the economy in general.
Well, I guess a major reason that situation didn't get worse, and I think the contagion was very much contained, were the forceful actions, Jay, that you and the Federal Reserve took through the use of your liquidity tools, including the creation of the Bank Term Funding Program. However, in deploying these liquidity tools, that has come at, against this backdrop where the preeminent monetary policy concern is high inflation. And that's, of course, a little different from some of the earlier episodes, and has raised renewed discussions about the so-called separation principle, right? And so I wanted to ask you how you think about the use of financial stability tools and liquidity tools as opposed to more traditional monetary policy tools and how they fit together.
It's an interesting question, but I want to start by saying, though, that the overall, the banks and the banking system are strong and resilient and well positioned to deal with the challenges they may face now or in the future. So, as you pointed out, we do have separate tools: monetary policy to achieve our macroeconomic objectives, liquidity, supervisory, and regulatory tools to address financial stability issues. But I see an important distinction between separation, this is the separation principle, separation and independence. Our tools can have separate objectives, but their effects are often not entirely independent. So the tools are complementary almost all of the time because financial and macroeconomic stability are so deeply intertwined. In fact, our consensus statement notes that sustainably achieving maximum employment and price stability depends on a stable financial system. So because they're so intertwined, to me, there is not likely to be an absolute and complete separation of the tools, nor is that possible or desirable. And I think as Ben's research and the global financial crisis demonstrated, financial stability affects macroeconomic stability and vice versa. We saw that clearly at the outset of the pandemic. As a result, the tools that we use to address concerns in either arena can and will affect both, especially during extreme circumstances. That said, yes, the tools are separate, they have individual purposes, and most of the time each can be used for its intended purpose without compromising the other. For example, as you pointed out, when banking stresses emerged in early March, we used our liquidity tools, the discount window and the Bank Term Funding Program, to make liquidity available to banks that might need it. And that liquidity supported the stability of the financial system without restricting the use of our monetary policy tools to promote price stability. While the financial stability tools help to calm conditions in the banking sector, developments there, on the other hand, are contributing to tighter credit conditions and are likely to weigh on economic growth, hiring, and inflation. So as a result, our policy rate may not need to rise as much as it would have otherwise to achieve our goals. Of course, the extent of that is highly uncertain. So.
Thank you. And of course, that I think the effectiveness of those tools is reflected in the fact that the FOMC has actually raised interest rates twice since the emergence of the banking strains. Of course, the purpose of that is to confront the inflation issue, which brings us to our next topic, which is in fact inflation. In the pandemic and the aftermath, We've had many renewed discussions of the important and classic textbook distinction between supply shocks and demand shocks, and in particular, the particular challenges that a supply shock can present to a central bank. And that's also raised a lot of questions in academia and in policy circles as to whether or not the inflation process post-pandemic is going to look quite different than prior. Jay, maybe we can start with you. A number of folks have argued that we are entering a new period where supply shocks will be more frequent. Would love to hear your views on whether you think that's a possibility and what that might mean for central banks.
So it's a great question, and it's one I think we'll be dealing with for quite a long time. And I'd say it's certainly possible that we'll see continued supply shocks. I also think it's just very hard to forecast that with any confidence. As Yogi Berra is thought to have said, Ben, you're the baseball expert, you can confirm or deny this, but it is difficult to make predictions, especially about the future. So I think that the best we can do at this stage is probably to just identify the factors that we think can lead to further negative supply shocks. I will say that, though, that positive supply shocks related to globalization largely probably contributed significantly to the period of low inflation that either ended or was interrupted by the onset of the pandemic. And I'm thinking there of the vast increase in global labor supply, the development of efficient global supply chains, facilitated by technological advances and things like that. And I would say those positive supply shocks do not seem likely to be repeated. At the same time, the drivers of the current inflationary surge certainly included a sequence of large negative supply shocks to the global supply chain for goods, which also experienced a large and persistent shift in demand from services to goods, and also the supply of workers. On top of that, Russia's war against Ukraine brought further shocks to global supply chains, particularly supplies of energy and non-energy commodities. So we can't know how persistent those shocks will be or whether further negative supply shocks will come along. Will globalization be partially or fully halted or reversed? Will it resume again as the pandemic mercifully recedes into memory? We can't really know that now. But for policymakers, the bottom line is that central banks will continue to be responsible for providing price stability, and that will require us to navigate whatever additional supply shocks do occur. So as Tomas and Ben and their co-authors wrote in the inflation targeting book, what a central bank can do is control inflation. And that is true over time, even in the presence of supply shocks, should they come.
Ben, I'd love to hear your views on this.
So unusual events which disrupt normal economic functioning often are followed by inflation. Examples are World War I, World War II, the Korean War, and now the pandemic. And the pandemic just makes it harder for policymakers to understand what's happening and to react appropriately. And in particular, the pandemic scrambled the labor market, made it harder to judge the state of the labor market. The opening led to a very extended rise in commodity prices, which was difficult to deal with. We had supply chain issues, which was pretty much a new thing, which was also a contributor to inflation. So there are many features of the pandemic that made this an unusual episode and a difficult episode to address. That being said, I think that, and I've done some research on this with Olivier Blanchard that we're presenting next week, the basic mechanisms, I think, are still the same. But you have a bunch of bad shocks, that's going to give you a problem. But the underlying mechanisms of supply shocks and tight labor markets and so on are really the same. So I think, I don't think there's been a major change in the underlying process that generates inflation, only a series of shocks related to the pandemic that gave us this episode. Going forward, I agree with Jay that we can't predict, what new shocks will come. We've got new technologies out there that might, make big changes in our economy. We've got, green investment, things like that might affect the price and availability of fossil fuels. And so there are many, many things that we can't predict. But I think that broadly speaking that the inflation process has not changed. And it's one aspect of that, which is very good news, is that the Federal Reserve's credibility has helped keep inflation expectations, particularly longer-term inflation expectations, reasonably well anchored, which is always sort of the first step in getting control of inflation.
You mentioned the role of the labor market tightness in the inflation process. I think it's quite striking that right on the eve of the pandemic, the unemployment rate was around 3.5%, a 5-decade low. Yet at the same time, inflation was kind of struggling to get up to 2% on a sustained basis. Here we are in 2023. The unemployment rate is roughly at the same level as it was prior to the pandemic, but of course inflation is far above 2%. So in that context, should we be thinking about the relationship between slack in the labor market and inflation differently? Do we not have the right measures of slack? Is it the problems with understanding what the natural rate of unemployment is? Or is slack really not the key to understanding inflation in the first place? Ben, you want to take that one first?
As I was talking about before, I think that the pandemic, to some extent, scrambled the usual signals from the labor market. And the Federal Reserve over time has begun to put more weight on things like the vacancy to unemployment ratio, which seems to give a better signal in a period of change when the labor market matching process is in change than the unemployment rate. So there has been some scrambling of those signals. That being said, it's simply not true that, even in people who understood since the 70s that there's not a simple inverse relationship between inflation and unemployment. In particular, what can break that relationship is supply shocks. And so during the 70s, we didn't particularly have tight labor markets most of the time. We had high inflation, A, because we had oil price shocks, which the Fed did not respond to adequately, B, because inflation expectations were not well anchored, and there was a strong tendency for price increases to feed into wage increases, to feed into price increases. So because of the presence of supply shocks and inflation expectations dynamics, there's no reason why low unemployment and high inflation can't coexist, but the remedies might be, depending on the situation, might be somewhat different.
Jay, how are you thinking about that?
So I'm very much in agreement with that. It's certainly true that we had both before and after the pandemic unemployment very low, close to 3.5%, but that we only had high inflation after the pandemic. Does that mean that our understanding of the relationship between slack and inflation is badly wrong, or that it has changed fundamentally after the pandemic? And my answer would be tentatively no to both of those questions. I think what really is different this time was the series of unexpected and persistent supply shocks that featured in the inflation process. I don't think labor market slack was a particularly important feature of inflation when it first spiked in spring of 2021. By contrast, I do think that labor market slack is likely to be an increasingly important factor in inflation going forward. In particular, inflation in non-housing services is showing signs of real persistence. In this highly diverse sector, labor costs are a high proportion of total costs, and that sector happens to account for more than half of the core PCE index. But all of this, the point is, all of this can be explained, I think, using our standard framework for understanding labor market slack. You could say it this way, that the natural rate of employment probably rose sharply as the pandemic severely disrupted the labor market. And the implication of that would be that an unemployment rate of, say, 4% indicated a much tighter labor market in 2021 than it did in 2018. And has been at the end of 2018 and the end of 2021, we had 4%